Hello, everybody. Welcome to episode number 8 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Mush, because every sports bet I make turns to mush. And I'm here with my esteemed co-host, who is the popular VWAP trader on Twitter. In the 90s in Vancouver, you might catch him at 2 a.m. shooing troublemakers out of your favorite club. Nowadays, in Saskatchewan, you might catch him at 2 a.m. shooing moose and elk off of his property. Of course, I am talking about the gorilla of House Street, JJ. JJ, how's it going?
Good, Ray. How you doing today?
I'm doing excellent. Glad to be on another pod. And today, our guest is one of the leading mindset coaches in the financial markets industry. A man with over 20 years experience as an investment bank trader, a host in his own rights of the Alpha Mind podcast. I'm talking about Steven Goldstein. Steven, how's it going? Thanks for joining us.
Pleasure to join you today, guys.
Yes, awesome. Thanks so much for coming on. And just a quick reminder to all the listeners. Me and JJ would greatly appreciate it if you guys would rate and review this on whatever podcast platform that you are listening to it. And with that, we'll get right to it. So, Steven, so tell us a little bit about your background in trading and then how that led you into becoming a performance coach.
So I'll try and keep it brief, but I started in the mid 1980s here in London, working for a Japanese bank. So I joined the rates and FX desk, and I moved around a little bit after that. I joined Credit Suisse in the early 90s, where I was trading rates and interest rate swaps and some FX products as well. And I joined the proprietary desk at Credit Suisse, and I did that for a few years. And then I moved to Commerzbank, a German bank in London. I'm sure you're familiar with that, your listeners. And then in the early 2000s, I joined American Express Bank, which was a small bank. It was a banking arm of American Express, and I worked there until 2009. And then, not quite in an overnight move, but I made a choice to become a coach. So I was the idea was put in my mind from my former coach. So about 10 years earlier, I'd worked with a coach, and he had a dramatic impact on my trading career. And I went back to him in 2009. It was an interesting time in the markets. I was at a career crossroads. I was actually looking for a job in a hedge fund, if I'm perfectly honest. And he had lots of contacts in hedge funds, which he put me in touch with. But it was his own suggestion that, had I thought of decided to become a coach myself. And I couldn't get that out of my mind. It was one of those things that I weighed up over the next few months, whilst doing a bit of trading for myself on my own and talking to other firms about getting trading jobs. And that's the route I decided to go down.
Awesome, cool. So the clients that you work with, are you working with institutional traders, buy side, sell side, retail, all the above?
All the above.
Okay, interesting. And your company, Alpha RQ, correct?
That's right. Yes.
And what year was this founded?
I started coaching unofficially in 2009. Alpha RQ was founded in 2012. But it was when I decided, I'd been working a couple of years by then coaching people, and I just decided to formalize it into a company.
Okay, awesome. I was looking through, your website, looking at, the different team of people you have, and I came across one of your coaches is a psychometric consultant.
Yes.
What is that, and how does that help? What would be the benefit to traders?
So this is Natasha. She's she's both a coach and she's a psychotherapist as well, and she's also worked in the industry, not on a trading desk, but close to it. But she does a lot of work with psychometrics, helping people understand their personality, their risk personality, the different aspects of how their personality affects their decision making, how they take and manage risk and run risk, and it shines a light on these aspects of the way they work. I mean, I use some psychometrics myself with people, particularly trying to identify risk personality, and it's very powerful. It helps people. We've done some research on it, and we see different types of personalities working in different ways with risk, and it's really interesting, because if you're not working in a way that's congruent to your personality, you're fighting yourself, and you won't succeed. It's not a matter of if or when. You won't, because you are fighting with yourself. But if you're working in a way that's congruent with your personality, well, then you've got a much greater chance of succeeding. You're bringing the best of yourself to your work.
Right. Yeah, no,
That's
absolutely. Yeah, no, that was something that really struck me from, like, reading the interview you did with Beyond the Trades. That I always thought that's a good approach, like that a lot of people don't give advice to, and that like leads me to my next question. Like, I want to know your thoughts on, like, I don't know if you've seen some of these like social like trading gurus on social media, I guess what people call them. What's your thoughts on people like the potential pitfalls with following someone's advice or following someone's trading plan without developing, like, let's say, their own, or like.
Okay, so I mean, I've it's hard to say, because you don't know who these individuals are. If they're someone who's got a background in markets and has succeeded, then I mean, their advice might be okay. I mean, I always tell people, follow your own advice. That's always been my, I don't give advice. It's strange, but as a coach, I don't advise people. I work with them on trying to get them to know themselves and how to bring the best of themselves to their work, and to sort of work on the blockers and the derailers that hold them back. I'm not a big fan of the idea of giving someone advice. I think mentoring is different, and I think every trader should have a mentor. It's hard for private traders and retail traders, because unlike myself, and I'm sure like JJ as well, when you work in an organization or a firm, you get people around you that you're learning from and you're learning with. And I don't know how people do it, retail traders on their own, just starting out on their own with no one really giving them a bit of advice, a bit of support. So if those so-called gurus are mentors and they're giving them that, that's great. But I'm not one for giving people trades and telling people what to do.
Yeah, absolutely. And I'm gonna ask one more question, then I'll kick it off to JJ. You there's a number that's always like thrown out around there that's saying that like 90% of traders fail, and in your interview you said it's actually closer, in your estimation, to 99%. And if that's the case, right, then at those odds, why would someone even want to attempt to become a profitable trader? Why would they even want to, like, go down this as a pursuit?
Right. Okay. So it's interesting. I mean, 99% is probably being a little bit generous, if I'm honest. I got that number from some extensive research which was done by some academics at the University of California, who they analysed 15 years worth of data of retail traders and day traders on the Taiwanese stock exchange. So it was over 400,000 individuals. So it was a huge
wow.
pile of data. And I think when they finished up, they found that only 1% of that group, of those over 400,000 people, was able to make a sustained career trading. Now, it's not the same as in any one year. So about 80% of people in any one year they found made money, but it wasn't consistently the same people every year. And in fact, they only, the ones who could sustain a career was less than one, I think slightly less than 1%. And actually only a very small percentage of those, maybe about an eighth, really made the big bucks. And, we've got a really interesting podcast coming out this weekend with a guy called Garth Friesen. He's a hedge fund manager in the US. And when he started at Merrill's, he tells a story of, the manager saying that, within a few years, there's only going to be about 10% of you left. And that was in a bank where you get support. Your odds are far better in a bank.
Mm-hmm.
So, I think those numbers are about right. But I don't think it's so crazy. I think anyone has the potential to do it. And, I always take the view that, if you're one of that, if you believe you're one of that 1% before you start, the chances are you're deluded. But if you don't believe it, that you're going to do it, why are you even bothering? So, is that catch
Mm,
22? You
Mhm.
have to believe
yeah.
in it.
Exactly. Oh, exactly. Exactly. Uh, yeah, I was just, I'm fascinating. That's a big data set, of traders, and I'm just wondering, uh, when we're talking about gurus and things like that, when people come to you, are they fairly seasoned traders? I mean, you probably don't speak to a lot of newer traders. You talk to people who have sort of, they've had a game plan and it's been crushed by some, twist of fate or something like that, or they're on a down streak. Is that more of your
Well,
clientele,
I
I
would
would?
say most of my clientele are actually on an up streak. Um, so when I
Okay,
work with institutions, they will give me the people that they believe have got the potential to make more, who are already good. And I usually,
understood.
I, I try to avoid the term fixing. It's and
Mhm.
if they think
Yes,
somebody's
yeah,
really on a down streak, they might give one or two of them to me if they say this guy's a guy who's made a lot of money traditionally, he's got a lot of potential, but he's just not doing it. They'll give those guys to me.
got it.
But you're right. I don't tend to work with new traders, guys within their first 3 or 4 years, because I don't teach method or system. And I
Exactly.
say, to those guys, go away and learn how to be a trader and see if you can. The first 2 or 3, 4 years, that's boot camp. You know, you got to see if you can get through there, and you need a mentor in that time. You don't need a coach. You it may be that you need someone to show you the ropes, and if you're still standing after a few years and you want to move up to the next level, we kind of use the analogy of, if you make it to base camp, then I'm ready to work with you.
Hmm.
And that's
Got it.
kind of where I'm at. So some of my guys are 5, 6 years into their career. Some of them are 15, 20 years into their career. The oldest guy I work with is nearly 50 years into his career. So, it's a constant, what it's like, this job.
Yeah,
It's a constant battle. It never ends.
definitely. Exactly. I had to go back to the psychometrics and how to trade your personality. Ever since I got into trading, I sort of I've done a lot of coaching for newer traders, and it's come to me that you do have to trade your personality. I have a quick question about that. I had one client who was a trial lawyer and very intelligent guy. He was a partner at a massive, massive multinational law firm in the United States, international one. He had done IPOs of large, large NASDAQ companies, just brilliant guy, but he had a fighting instinct and he would fight the market. And he's one of the guys I could never help because he would always get into a position and then try and fight the market. And of course, he'd get run over because he's just a retail trader. How do you, how have you seen that before? And how do you deal with that
Yeah,
personality type?
it's interesting because normally they're trying to fight something within themselves. The market just becomes a representation
Uh,
of whatever it is they're fighting. They're trying to prove something. The market doesn't have an agenda. The market just is. It's like I always call it. It's like the ocean.
yeah.
It doesn't care about you,
Hmm.
and you just need to
Exactly.
respect it. And if you're fighting it, you're fighting something within you. You might be fighting something within your past, a need to prove your own, to validate yourself, to prove yourself right. And I do come across this, and it's a huge challenge, and it's a challenge that I meet. I meet with guys who have been doing it 20 years, and then they'll suddenly get caught into a loop, and they'll start doing this. So it's not something that goes away, but you can keep it. It's almost like you have to keep it at bay. I mean, a lot of these things, I call it a bit like being an alcoholic. You have to sort of just think that you've always got whatever your
Exactly.
these areas, these little things that surface. They're always capable of resurfacing any time, and you're never quite cured. You're constantly fighting it.
So I guess the awareness of it at all times when you find yourself in that situation, if you're aware of your behavior, maybe that'll sort of spark.
Well, there's one thing, yeah. There's first the awareness. The other thing is where we go deeper. We do a lot of deep work, um, and that is where we, and I got to be. I always have to be a little bit careful because I'm not a psychologist, I'm not a psychotherapist, but I am trained in a particular form of coaching that I studied and learned with psychotherapists, and I am actually accredited by a European Association of Psychotherapists, but I'm not one. But we do this work where we go below the surface and we try and help the people using various techniques try and understand what is it that's beyond consciousness that's causing these behaviors. And it's incredibly empowering once they start to discover it.
That's fascinating. That's really fascinating because when I, for myself, falling down the rabbit hole of retail trading has been a real eye-opening experience into my own, into all my demons. And when I started trading, I could make markets in 30 different stocks at the same time, feed or order flow here, there, manipulate this, do all that. And then trading one contract on an E-mini futures contract would get me all upside down and my blood pressure would go up. And, and that's a function of me not knowing what I was doing, number one. But I took a lot of, time, and I found myself not taking trades or being afraid to take trades because I felt like I didn't deserve to be successful again. How have you encountered that with people where they sort of hold themselves back because they feel they don't deserve it
Yeah,
because they're sort of
yeah,
punishing
yeah, I
themselves?
do. And, I see this a lot, and, they don't always use the term, I don't deserve it, but they do use various other forms of that. And, it's happened so often. It's something deep in the subconscious normally. And, you're right. Well, you said at the beginning, I think trading, it finds every single part of you, every little chink in your armor, it will find.
Wow, it's
Yeah,
fascinating how it does that. I, I've I've done a lot of things, and I've pretty much worked every job other than being a waiter because I'm too clumsy. Built, I've built power lines. I've been a heavy duty construction, heavy duty mechanics assistant, all of these things. But trading retail is the hardest thing I've ever done. And it's because I've had to figure out myself and my demons. And so that's why
it
I've been
screws it
really,
screws
really,
with people in ways that just no one can quite understand. A few years ago, I met this Dutch guy. This Dutch trader came up to me, and he was, he was actually he'd fought in Afghanistan. The Dutch had a small contingent with the NATO forces, and he served in Afghanistan. And he came up to me and he said, "That was nothing." he said, I know. He said, I know my
Wow.
body was on the
Wow.
line, but my mind could deal with it."
hmm
But he said this. He said it's just in a
wow.
whole new league. So and that always stood out for me in that conversation because I didn't want to be frivolous because he'd experienced sort of life under fire, and yet he was telling me that that in his mind that was nothing.
Yeah, it's it's funny you say that because one of my clients was an ex bomb disposal guy, and he would be like, "Oh, JJ, this is nothing. Just try defusing a bomb." And I'd be like, "Oh, that's okay, you can do that." But no, I do. I guess the perspective of that sort of thing. I was wondering, for a lot of traders out there, we go through periods of drawdown where you just can't see the market or you're executing poorly. How do you sort of get guys back on track
Right.
that way?
Okay. So it's I suppose you have to get clarity. Um, uh, I've experienced it myself, so I've experienced that deep hole you go into, and the tunnel vision that develops when you're there, and and sort of you can't see anything else. You can't see beyond the screen, and it's incredibly difficult. And I go back to a client of mine who I was asked by it was a bank. So it was a client at the head of FX asked me to work with this guy who he said had got into a complete hole with his trading, and his drawdown at that point was $1.5 million, and his stop loss for the year, and that was literally if he hits it, he's out, was $2 million. And he said this guy's already got, the head of the overall head of trading has already said that he wants this guy to, he wants the head of trading for the FX desk to get rid of this guy. And he said to me, he said, could I work with him? He's got $500,000 left. He just seems to lose money every single day. He doesn't, but he really wants to help him. He really wants to turn it around. Could I start working with him? So I met the guy, or we had a phone call. He was in a different country, so we had a call. And by the time we'd had the call, he was down to 1.8 million down. He literally had 200,000 to go.
Wow.
So we did a first session, and it was an emergency session. We don't normally do these sort of coachings, but I said, I'm going to have to speak to you every couple of weeks rather than the usual sort of more structured program. And 2 weeks later, I called me up and I said, you have to stop trading. You have to break out this cycle. You have to not do anything. You have to get your mind clearer, bring some clarity to your mind, because whatever it is, you're not seeing it at this point. You're not seeing the market. And then the next time I spoke to him, I think it was just a week later, he dropped another $150,000. So he was at 1.95 down now.
Wow.
And I said, what? You've got 50,000 left. You're not going to make your money back from there.
Yeah.
I said, what happened? You said you were going to stop trading. And he said, yeah. He said, I was going to stop trading, and I did for about half a day. But I saw this Aussie dollar move, and I jumped up, and I was like, no, this isn't happening. Anyway, I said, now you've got no choice. You've got 50 grand. You're not going to talk to me if you carry on trading, because you're not going to make it to the next session. Just stop. Just don't look at a screen. Bring in a book, whatever, do anything. Anyway, the next time I spoke to him was a week later, and he said, I haven't traded for a week. I said, how do you feel? He went, I just feel relieved. He said, it's really strange. He said, I'm not looking at the market, but I just suddenly feel so much better. So I said, okay, so we're going to try a few things just to perhaps try and get you in the groove. We're just going to do the smallest trade possible, which he found really hard because, size matters in these, in these banks.
Exactly.
I said, I want you to risk no more than $5,000 on a trade. And he laughed at me and he said, even retail traders wouldn't do that. I said, don't worry about what anyone else thinks about you. Just do it. Just to get you back in the groove, see what you could do. It's a relevant size. See if you can do it. And the next time I met him, he made 10 grand doing that. No drawdown or loss. And I went, that's brilliant. That's probably far harder, for you than you were when you were trying to make big money, because the size. I said, how much did you risk? And he told me it was literally hundreds, and he said the size was a bit embarrassing, but his broker understood. And then he just started to claw it back. It was incredible. And by the end of, the next time I met him, he made 100,000, which was, incredible. And then he suddenly said, I know I'm still close to my drawdown, but I haven't got this red flag hanging over my head. I haven't got an X over my head that the senior manager's not on my back at the moment. He's given me time to try and see if I can prove my worth. And then he just went on this run. And by the end of the year, he was still $1 million down. But to make that back from there was incredible. And he was retained at the end of the year. Somebody else on another desk was the person that had to get their head count down by a couple of people at this point. But he was retained. And, the next year, he had a brilliant year. So, you can do it, but you've got to break the cycle.
Break the cycle. That's great advice. It's something that all of us struggle with, and sort of along that line too. I find when I was on the other end or the other side of the desk, emotions really didn't play that much because, you're running 200-300 trades a day and you're basically trading order flow. So, you're doing you're an order taker trader, where you're working out blocks of stock for me. But in retail, I find that you need so much to be present mentally. And what I'll do is, if I'm having a bad day emotionally or something's wrong in my life, I just won't trade. Now, a lot of people have trouble with that, but I'll just sit on my hands and say, I'm not feeling right. My emotions aren't right. I'm not going to trade. Is there a way um, to be able to like isolate yourself? So even if the world around you is collapsing, that you can focus and trade. Is there anything that you sort of,
Yeah. I think one of the things that I do in my work is trying to get people present. So I try to understand the systems that they're part of, the bigger systems. That they're we don't just look at what they do in their job when they're sitting at their desk, but what are the influences in your life? What are your family systems? What are your social systems? What's your financial position? If you're trading and there's a risk the roof's going to come off on your head on the house because the mortgage guy's coming.
That's true.
I don't think you can make money. You have to be in an optimal place. We talk about how hard it is, this job. It has to be full focus. You have to be as present as possible, because if you want to be one of that 1%, you have to be so damn good. And that means being fully focused like a sports person, having that kind of almost laser-like focus. And, that 1%, they're taking the money from the other 99%. They're not taking it from anywhere else. And, it's not money that really exists. It's money that has to be taken from someone. It is a zero-sum game. So, you have, and you're right, if you're not right, if something's not feeling right, you're probably going to lose money. And, you have to remove yourself. You have to find something to distract you. And, too many people, they trade when they're suboptimal, which means you're just paying, you're paying someone to give your money away to somebody else. It's almost like, and
Exactly.
I know Ray's a big poker guy, right?
Yeah.
And it's almost like joining a poker table, paying to be at that table, and knowing that you're just going to give the money away to the other guys.
Mm-hmm.
Very true. Very true. Huh. Yeah, that's really interesting, because that's I've sort of spent time learning the market. I see, I see I see the strategy, and I see my outcomes of up, down, sideways, whatever, and I know where my execution points are. But if I'm suboptimal, my execution is off, or I'll hesitate, or I'll chase or something like that. And it took me a couple of years to figure out, oh, okay, my emotions aren't, like, I'm not calm, and so I'll just stop trading until I am again. But
It's a hard thing
it's
to do, but I
interesting
mean,
that
you see it in sport all the time. You see a player who, his head goes. A tennis player it's so visible in tennis. You see a guy double fault, and then he'll just crumble and lose the rest of the set, and then he's got a little bit of time to try and reset, and he does the reset stuff in between games. But you don't get a lot of time, so you see that in sport. And the coaches see they'll put a player off because they'll see, his head's not in the right place. It's hard to do that, but it's hard to do in trading. There's something else I wanted to mention, which, if I could, you talked about that move from
please.
market maker to trader. I work with a lot of people who make similar moves. Market makers are becoming less and less. There's less of a job as the robots.
Oh gosh,
As the robots.
we're
Yeah.
dinosaurs.
So, but there's a lot of guys trying to set themselves up as traders. I've worked with some. I've also onboarded some from market making roles into prop roles in hedge funds, and the transition catches most people out. And I always use the comparison: when you're a market maker, you're like the house. You're really playing a different game. If you think of blackjack, the house is not playing the same game as the players. And when you're a prop trader, when you're a retail trader, you're walking up to the table and you're playing that game, and you're playing a very different game to the game that the dealer's playing, the house is playing. And it's almost like two different jobs. And
That's very true.
that catches out so many people.
Yeah, it caught me out. The very the first 6 months, a couple of months, definitely. I was my ego just took a beating, because I've manipulated stocks from
Yeah.
30 cents to $300, and and then I can't trade
Are you
one
allowed to
crummy
say?
ES
Are you allowed
contract.
to say
So your
manipulated?
ego, oh well, it's. I think the statute of
Okay.
limitations on this stuff is gone.
Okay.
I'm pretty old,
But
so
if you disappear
but
halfway through this call, we know what's happened.
Oh, Steve, Steve,
oh, that's why
Steve,
I never
Steve. He
show my
said
face.
worse. He said worse on this podcast. So he's still here.
Most most of my ex clients look like
All
characters out of a
right.
John Wick movie. So this is, they'd call me up and they'd go, JJ, we need distribution today.
Right. Right. Okay. So
You know,
you were a bouncer as well, I gather.
so
That's right.
yeah, I started out as a bouncer. Well, I went to school and I went to school for microbiology. Because I'm a typical Asian kid that his parents wanted him to be a doctor, but I had no talent, nor did I have the brains for medical school. So I moved out to the West Coast and was working as a bouncer, and I was working as an organic chemist making shampoo in the daytime, working in a bar at night, and that's where I met the traders from the Vancouver Stock Exchange. So uh, I sort of got into the industry a very
But
non-traditional way.
there's many routes into it. So that's one of them. I mean, they used to be like that when we,
Yeah.
back in the 80s and 90s. You just had an interview with someone in the pub
Oh
here in
yeah.
London, and if he liked you, you got a job. You know.
Exactly. You could start in
Yeah,
the
yeah,
mailroom or
yeah,
something.
absolutely. We did have guys who started in the mailroom. They became some of the best traders,
Yeah.
and the guys who joined from university were sort of behind them after a few years. I think it's wits. I think they
That's
lived on
true.
their wits, and I think that's what got them through it.
Mm.
That's
Mm.
um one thing I read in the interview was how to let go of outcome. Um the, that's something I had to struggle with too, was I was focused always on the outcome of the trade. Um how do you sort of, coach people through something
Right.
like
Okay.
that?
So it, it's almost that almost comes to sort of trying to get them to sort of redefine a little bit what they're doing and get them to think about the job in a broader sense. So I have a model which I use, which I've evolved from psychotherapy, which is to say that the trade is a process, and it's an entire process. It's not just when you put the trade on. It's seeing it through to the conclusion. It's letting go of it. It's leaving it behind, and then it's starting again with the next trade. And it's part. You have to see it as a process and a series of processes, a series of loops. And as long as your model is good and it's got a positive expectancy, but you can't always tell it's got a positive expectancy. But as long as it's a process that you feel is going to work, and historically it shows it's going to work, and you're doing the right things. I mean, you can't prove anything's going to work in trading. This is part of the problem. You're always dealing with uncertainty,
Mhm.
but you just have to trust the process. So you may get a run of losers and a run of winners. And if you came up with a trade and say you had a target level, an entry level, and a stop level, and you, it's incredibly difficult to think of it, but you've got to think of the bigger picture. This is a process, and you have to trust that process. You have to learn to trust the process. You have to factor that in.
Mm.
Everyone does it. Um, one of the greatest successes I had was with a trader in a fund, um, who came to us. He joined from a bank, and he'd been a great trader in the bank, but he was struggling in the fund. And we you know he was a very diligent record keeper, so he kept a record of every trade idea he had, where he wanted it to go, or where he hoped it was going to go, how much risk he was going to put on, and where he was going to get out, and what circumstances would change that might cause him to change his thinking on these trades. And we got him to run through 3 years of these and see what the performance would have been if he'd stayed with the ideas he had. And the performance would have been amazing, but his actual performance was awful. I mean, he was just keeping his head above water, which in a fund you can only do for so long. They don't have much patience for it,
Exactly.
you know. But they
No
believed
kidding.
in him,
Yeah.
which is why they put him through for the coaching. And once he actually realised that if he learned to trust his process, his results would have been really dramatic. And I don't think anyone can ever do it. It's incredibly hard to do exactly what your theoretical ideas would do. But, just allowing him to do that exercise, he realized that, I have to learn to trust my process. And we revisited this every single time we met. So he started getting a mantra in his head of trusting the process. And I always say to people, keep records, keep a journal, you know, look back over it, assess where it would have gone, start to see the patterns that are working for you, not just the market patterns, but your own patterns. And as you do that, you'll learn to trust them more. And then you'll stay with things longer, and you'll give them room to kind of breathe and to come to life. But it is an incredibly difficult thing to do. That's why this job is so hard.
Yeah, definitely. Yeah. No, I
You're
I
fighting yourself.
definitely
It
no
goes back to that
argument
thing. You're
here.
fighting
I'm
yourself.
very
You're not fighting the market.
that's very true. And my next question was, do you believe in keeping a trading journal? I mean, I do it, and I find it helps me quite a bit.
Yeah, not
Um,
everyone does it, but
do most of
to me, this is keeping a journal is the hard yards of trading. It's boring often. It's mind numbing. It's tedious. A lot of people just start it and then forget to do it. But it's like if you want to run a marathon, you've got to get up and you've got to pound the streets early in the morning. When it's freezing cold or when it's really hot.
mm,
And you've got to stretch yourself. You can't just pound the streets, but you've got to try and get certain times, work on certain points. And if you're not doing that, you're not getting better. And you're never going to sort of be able to compete in a serious level as an athlete. And it's the same with trading. You have to do the extra stuff. And this is what people don't do. All they want to do is watch the market. All they want to do is put on a trade. They're not developing themselves. And developing yourselves, that is the hard yards of trading.
very true, very true. Thank you so much. I really appreciate it. It was very, it's really mind expanding having someone who's, it's one thing. I have a friend of mine who's a PhD in psychology and brilliant guy, but he's never traded anything in his life. So it's nice to have someone who's actually been in the trenches. Understands what we go through, and then can
Yeah, and
help us
I think
figure
I
out
think that's
ourselves.
what when I do work with people, I think that's what resonates with them. In that I've been in their situations. I don't pretend to have the answers because every person's situation is slightly unique, but I can resonate with them and I can cut through the noise to sort of ask the right questions.
Thank you so much because when I started this whole thing, people would say there's three pillars. There's your trading methodology, your money management or risk management, and then your the psychological. And I find that the trading methodology, or the edge, and the risk management, I don't think you should even click a computer mouse or take a trade before you even know what those are or have figured that out. But the psychology of it, I found that is the thing that 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 has gotten me and that gets me every day, and that's something that I have to keep working on. So I really appreciate having you on the show
That's a
to help
pleasure.
clarify a lot of this stuff.
Yeah, well, I still got I got a couple questions left for Steve, so don't go nowhere yet. Yeah, so Steve, and I'm going to try to articulate this question correctly, but like for myself, so drawing from my experience from poker, right? Going back to talking about in poker, we call it like downswings. I know you guys call it down draw, right? So
Yep.
going through like downswing, and how I try and like rationalize myself, like rationalize me keep playing, right? Because when you alluded to earlier, like JJ was asking about working with people who just want to keep trading, they're like fighters. I would probably describe that's like my style. Like I always want to battle, I want to get in there, I want to play with people, and in poker it's a little bit different. But when I would go through downswings, how I'd rationalize myself still playing day in and day out would be like, okay, I know I'm better than my opponents. Like my approach to poker is very like rooted in game theory, right? And I know it's like, hey, I'm better than my opponents. Emotion, as long as I'm not like, I can sense I'm over emotional, I'm just going to play based on my strategy. I'm going to stick right to it. Emotion's not even going to matter.
Yep.
Like, is that me just rational? Like, what would you say to me, like with that rationale?
I don't think you can fight your emotions. It's the same thing. I mean, I always say to people, embrace your emotions. It's part of who you are. It's like trying to lose your shadow.
Mm-hmm.
Try and understand how they're going to come to how they're going to appear at the table. You know, it, Rather than fight it, you know, you might be able to use that. So, we've got some traders who are really, I would call them nervous traders. They've got a nervous energy about them, and they are brilliant at feeling the market, and they make a lot of money doing very quick in and out short trades. And really what they're doing is they're going to their strength. They're emotional guys, and those emotions give them an advantage. They seem to have
Mm-hmm.
this split second ability to just feel where the market's going, to just sense what's going to happen. And that is a huge edge, and they use it to their advantage. But they're also clever with it. They know they can't do it all day long. It's going to exhaust them after a very short amount of time. And the best example I saw of this was an FX trader who was a day trader, and he worked at a fund. And he was in and out of the market from 7 o'clock in the morning. He would stop at 1. He said, after that, I've got no edge. I've got no advantage. And this guy was trading big size. He was a really nervous individual. And in 1 year, the year I was 2015, I think it was, he made over $100 million day trading at this fund. He was like he knew his limitations and he knew his strengths, and he went to that. And then I've got other guys who can sit back and they're not phased. They can have huge risk on. Uh, they don't do the in and out trades. They'll run them for weeks and months even, and they can just get on a plane and fly around the world, and they're out of touch with the market for 12 hours, 15 hours. And it's a different sort of trading, and they have a different sort of energy with them. And they're still emotional, but they're emotional in different ways. It's not an obvious emotion. But it's really interesting because I want to bring in a guy who comes into nearly every single podcast that I talk about, who was a poker player, and he was a brilliant
Mm-hmm.
trader as well. He worked for a bank in Asia, and I was coaching him at the time. He's working for a US bank, and it, when I started working with him, he told me that he plays poker. He goes over nearly every weekend to Macau and takes parts in tournaments over there.
Mm.
And his trading style was very similar
Wow.
to his poker style. And he said to me one day, he said, and I'm sure this is a different style to you, but he said to me, when I'm at a table, he said, I'm no better than any other player there. He said, they're all as good as me. He said, they all understand the hands, the cards, the value of the hand. They know the rules. He said, playing poker, I'm no better than them. He said, but walking away, he said, I can wipe the floor with them. And that's what his thing was, walking away. So if he wasn't seeing the cards and they weren't falling his way, he knew that at some point his emotions are going to come out and he'll start playing hands he shouldn't, or he'll start going up against people who have been, who have been getting the pile was building, and they're going to outplay him. And he had no shame in walking away, just saying, "Guys, I've had it. I'm not seeing the cards." And obviously they're trying to keep him in because, if a guy's losing and, his pile is shrinking, the guys who are making the money want to keep him at the table. But it never fazed him. And, he actually, I didn't realize it because, this guy he didn't reveal this to me, but I found out afterwards. He was actually ranked in the world's top 200 poker players at the time. Yeah.
Wow.
And that was the thing he did. And he did the same with his trading. He could get out of a position, walk away, not go in the market for a few days, maybe even a couple of weeks, because he needed to get closure in his own mind. So A, he could come back fresh, and B, he wouldn't trade on tilt, and he wouldn't be playing poker on tilt. It was the same strategy.
Right, absolutely. Yeah, I think that's definitely like one of my like weaknesses when it comes to poker. I think like at least how I like try and rationalize it to myself. I think sometimes I like oh, I've prepared so much. You know what I mean? Like, and I'm like just trying to trust my preparation. And it's okay, like, but I'm ignoring that emotional side. Like, I'm like, it's almost like I feel like it's like my ego. Like, oh, like I'm above it. You know what I mean?
Yeah.
Like, it's probably ego involved, I would imagine.
Oh, huge. And this guy had virtually no ego. He was as close to anyone that I've met who is egoless. He does have an ego because you need to have an ego to step out into the market every day and to want to succeed and to have that drive. But he knew how to keep it out of the market. But he did say to me, "Steve, how do I cope with this? I'm struggling with this." And I'd say, "Look, leave the desk, go away, go for a walk." Or he had distractions that were affecting him, that were, sort of, to use the phrase, putting him on tilt again. So we worked out a way. It was about getting his environment right, his trading environment. So he was all about being allowed to be in the optimal state so that he could just be at his best when he's in the market.
Yeah, no, that's great. No, I think just talking to you now, like going forward, I'm like going to like I can already feel like I know I'm going to be more mindful going forward. And another question that it's poker related for me, but this will also be relevant for traders. Like, so for me, for like me playing poker, like I primarily play online, right? So it's a very like lone, I guess, quote unquote lonely thing. And like you got a lot of traders who are listening; they just trade at home alone. And that's always been like a struggle for me. Like I don't have too many like poker friends, like people who I can talk to who understand what it's like when I'm going through a downswing, or who I can like talk hands to about, or just like they just know like what I'm going through. And it's like I feel like it's always been a tough thing for me. What are your thoughts on people cultivating like a community or having trader friends, etc.?
It's essential. I mean, I'm a huge. We spoke about this on. We did a podcast with a guy called Mark Hutchinson, who's an FX trader, who's he's created a mentoring business as a whole community. And he says, he found trading really lonely when he was doing it. It could be going out of his mind. And, I think this is the hardest thing for retail traders. It's one of the things that's going to hold them back because you just lose yourself in your mind. And I did it for a few months, when I was at the end of, in between jobs, I traded for 6 months at home on my own. I had someone was funding my trading. So I had some money behind me, but, I could have gone into an office with some of the guys that the guys were funding, but they were equity guys and I was doing FX and rates. So I didn't feel any need to be with them. I couldn't see the point of it. But, after just a few weeks, I started to was going out of my mind. I'd worked all my life with people around me. I loved being in a trading room. When you've been doing it for 25 years, and
me too.
You're ripping people apart.
Yeah.
But that's part of the fun of it. It's almost like it's like a band of brothers mentality. You support each other, and
exactly.
I just was, and I know a lot of people have said the same. And I know this. Like it's almost like loneliness kills. loneliness kills your trading. And
Mm.
I think you need a community. That's why I think some of these mentoring services, some of these, the FinTwit is a great community. I know it's not quite human contact, but in a small way, it starts to fill that gap a little bit. And I think you need to subscribe
It
to some
does.
sort of group, some sort of mentoring group, you know, and you need to get quite a few people because, if you just have one or two, they can drive you mad as well.
That's true, actually, and I found that I found a huge problem with that when because I miss working on the desk every day. I miss the joking,
Yeah,
the practical jokes, that sort of thing. And like we'd always say, we'd cut each other's heart out for an eighth, but when the chips are down and you really need somebody, your guy, the guys are there for you, and that's why I started with this room that I'm in, and it really um, Twitter actually helped me get some new friends and things like that because especially in the town I live in,
yeah.
nobody talks trading at all. Um, Most of my friends are retired police officers or law enforcement, and they don't even if I start to speak, they're just like, "Shut up, JJ. We don't want to hear it." You know. So we
Now, I think it's brilliant, and I think
yeah.
belong to these groups. You know, I think there's if you live in a big city, I think you can do meetups. There's quite a few meetup events around, but it's good to form some of these and to meet other guys and to hear other opinions as well, because what happens is you start getting that tunnel vision where you've got no one else to contradict your view, or you can't share your view with someone and have them critique it. Or you haven't got other people to give you ideas because, even though I'm not a fan of taking other people's ideas, they can inspire you. You can go, yeah, that's a good idea. I've
Exactly.
not been looking at that, you know, and
Very
yeah,
true.
I was always best when I had a partner that I was bouncing off.
Mhm.
Stephen, just a few more questions, and we'll get you going. So your thoughts on paper trading? Because I've heard, both sides of the coin argued that it's good for the learning curve. I've heard people say it's a waste of time because, emotionally it's way different. What are your thoughts?
Yes, yes to both of those. I think it's good for no more than about 4 or 5 weeks. After that,
Mm-hmm.
it's like I use the analogy, and I use a tightrope analogy. Paper trading is like learning to walk a tightrope. It's you learn maybe 2 feet off the ground, so you learn the mechanics of it. You learn to balance. You learn the basics, and pretty soon you can walk that tightrope 2 feet off the ground after a couple of weeks maybe. But that's not tightrope walking. Tightrope walking is when it's 50 feet off the ground, and
Right.
it's just fooling yourself. And that's the same with trading. A lot of people learn to trade on the ground, and that's not trading. You've got to learn to trade in the air. 50 feet off the ground, where you're going to get, if you fall, you're going to get hurt, and you need to get hurt to learn, and you need to learn to recover. I got a great interview with an incredible psychologist. Have you heard of Brett Steenbarger? Okay, so we did
Yes.
a podcast with him. It's going to come out in a couple of weeks' time. And he made a point that most of the successful traders, most of the greats, suffered some catastrophic losses earlier in their career, some catastrophic failures.
Mm.
And he's
Like,
interviewed a lot of these guys, and he said it was a recovery from that where they learned to trade. It wasn't the period before that. It was the recovery from the losses, the failures. And it's I think till you have those, and so that's only when you start learning to trade. It's when you've had that fall. The rope's been raised a little bit. And you raise the rope to 10 feet, but then that's not really. That gets you going. You start to feel it, but then a lot of people can't move the rope higher. They stay at 10 feet. You've got a lot of guys who they're not going to really make money to live on, and until they learn to trade at 100 feet or 200 feet. But a lot of them get comfortable trading at 10 feet and they think they're doing okay, but they're not. They're not making enough to live on, which is another thing that there are some people that make money, but they don't make enough money to sustain um, a career, to keep the costs coming in for the next 10 years. And, and you've got to factor in, you may have a year or two where you don't make money. It doesn't mean you're a failure. It just means your process has struggled or you're struggling to adapt and tell you the market's not constant. The same market is not going to go for the next 10 years. It's going to change at various points and maybe in many points. Algos, they have a run where they work and then they stop working and then a new algo comes along and starts working. No system stays the same. And, I know some guys who have, been working, trading 20, 25 years. They have had 3 down years within that time, a couple of average years. And you have to factor those in as well and think it's not failure. It's just the normal.
Wow. Yeah. All right. So Steven, so you in your Beyond the Trades interview, you mentioned that balance is vital. So question, so what would a balanced person's day look like? And is being balanced, is that going to like be individualized, like different for each person?
Yeah, I suppose so. But I suppose, I talk about, quite a lot of guys I work with, they focus on their nutrition, getting exercise, being in the right mindset, of not allowing distractions from their social life or their personal life to come in, and then they can be, they can arrive at the desk in an optimal sense, and then it's trying to focus on the market, and it depends what your time frame is, and are you doing okay? Can you live with a drawdown? It's important, and it's important to understand what your process is. So, you move out, but it, if you're agitated, you're probably not going to trade well. If the market's really quiet, that could be the biggest problem. That was often my problem when I traded. I liked a fast, volatile market most of the time, and I had to, be careful to sit on my hands when it wasn't happening. So, balance means different things for different people. And again, that goes back to personality. Some people like a very evidence-based approach. So balance means staying with the evidence-based side of the work. Other people that actually like the excitement and they thrive on that. And that's what gives them the advantage, the novelty. So they've got to remain balanced in a way which allows them, but they will use that nervous energy and that excitement to be creative. They'll have a different risk profile to the guys on the other side there, the evidence-based guys. And again, you're some that, very, big picture. And again, there's a difference balance there. They're not very good at the detail stuff, and the detail stuff can bring them down. So they need to make sure that they're on top of the detail stuff. And then the other side, you've got the guys who are very detailed, but they're sometimes missing the big picture. So it all depends, again, where your personality is, where your strengths are, where your weaknesses are, and trying to sometimes balance those out so that your weaknesses are not going to bring you down and they can allow your strengths to thrive and come through, and you can leverage them most effectively.
So Steve, so what would be like a sign, right? Like a personal, like an internal sign that one would know that they're out of balance?
Okay.
And I asked, because Steve, I asked it because you always hear people say that, oh, you want to live a balanced life, you need to be balanced, and like I always felt like I don't know, like what is that? I know it's individualized and it's personalized, but what does that mean? Like it's hard, and I guess it's a hard question, but like I don't know if there's something you found that where people, it's like, oh, hey, like I'm feeling like burnt out. I'm not enjoying playing poker anymore. So maybe that means I'm out of, is there any like key signs you found?
Yeah, well, it's quite strange, but funnily enough, I mean, I try and get people to notice it, and it's incredibly difficult to do. To notice it in yourself is the hardest thing. It's almost like the Holy Grail in a sense. I, I talk about some of the real great traders that I've coached. They almost have this ability to step outside themselves and notice themselves. And that's what I talked about. When I talked about this guy who was a poker player earlier on, he almost had that ability to be both within himself and to be outside watching himself, which is how he was able to remove himself from the table. Because it would be like he'd tap himself on the shoulder and go, "You're not seeing the cards. Let's close the pack. Let's not worry what anyone thinks. Let's walk away." And that's an incredible gift. And I've met quite a few people who can do that. And I try and work on people when I coach them. It's about being present. The more present you are, the more you'll notice these things. And the more you'll notice the signs around you. You'll notice maybe other traders who are struggling, or you'll pick up on something which comes down a squawk box that gels with something you've noticed in the market, pick up in the sound. And it gives you a split second to spot something. And, I talk about what was my best ever trade, where I was completely focused and balanced. And I was down a lot of money at the point. This was in 2007. But, I managed to, I kept reminding myself, this is a process. Don't worry about being offside or down or deep in drawdown. The market's playing out the way you want. Not quite the way you want because you're losing money. But it's all part of the process. It is still following what I was hoping was going to evolve. And then that kept me in the right mindset. I wasn't panicking. I wasn't, thinking, what's going to happen here? I just focused on the market. And on this particular day, we had some data released. It was US data. I think it was GDP. And the market made a move on this GDP data, which didn't quite seem right. It should have had a much bigger move. And that alerted me to something. And then I started looking at the volume in the market, and the volume was something didn't seem right. And then I just loaded on this position, which is the same position I've been following for a few months, but I'd increased it, decreased it. And I just hit my full limit on this position in seconds. And this market just flew. It was actually the German bond market. We call it's the Bund. I don't know if you're familiar with it.
Okay.
And
yes,
it works. It's very closely linked to the UST note. And it started this huge move, which lasted a couple of weeks. But had I not been at that point, at that second, in the right mindset, all these things wouldn't have come together at that point, which allowed me to just get this trade on exactly as I'd planned, wanted, hoped, within the structure I wanted. So it was me being totally present at that point and not allowing myself to become unbalanced by the fact that, it's been a couple of tough months. I haven't made any money. I've given some money away. I'm in negative. I'm in a drawdown situation, quite a big drawdown situation. It helped that, I was in a firm. I was in a company, so I had the backing of my manager, who a couple of weeks earlier had kind of said, "Look, Steve, don't worry about it. I've got your back here." That's why we talk about the loneliness thing. When you got people who come around to you and say, "I've got your back," it's the most empowering thing in the world. It's like saying they trust you, and then you trust yourself.
So.
But that was balance. And this guy who I talked about, the poker player, just the most balanced individual I'd ever met. It was that ability to eliminate ego. And when I say I notice something, so if I'm scheduling a meeting with a coaching client and he's not answering me, quite often, something's wrong. He's saying, "Can we hold it off a couple of weeks? Can we hold it a couple of weeks?" And that's usually a clue that they're in a bad point. They're unbalanced. And I was working with this oil trader in America, and he was having a pretty good year, and then suddenly he dropped the whole lot in about 2 weeks. And he was a guy that was coming on to, avoiding the next coaching session. So I knew something was up, and this went on for about 2 months. And then it was really interesting because actually, he called me up and said, "Look, I'm really sorry. I've had a bad period. Let's do it next week." And he decided to take a week off before talking to me because he needed to clear his head. And then we talked about what happened, and we worked on what we call closure. Getting closure on it. It's like, it's like you marry a position. It's like marrying a girlfriend and she leaves you, and you can't get over it, right? Um, and he couldn't get closure on a bad trade 3 months ago, which just took him into a negative spiral that whatever he did was wrong, when actually the market move he'd hoped for had actually panned out, which kind of was a double hit. Anyway, he got closure on this and he went back in over the next few months, and now he was balanced and he traded like a demon, and he actually made more money. Excuse me, sorry, that's you've got to ignore that sound. If you can edit it out. um, he traded like a demon and he made more money in the next 3 months than he'd made in any single year. But he got back to that point of balance and presence and being focused and doing the right things that he needed to do. The process. If you follow the process and don't worry about the results so much, you have to worry about them, of course. It's process. It's all about process. Process orientation, not results orientation. And you'll get that as a
Right,
poker
absolutely.
player. The similarities are
Oh, yeah.
so huge.
Absolutely. Oh, absolutely. Yeah, no, like everything you're talking about 100% applies to me. And no, like seriously, just like listening to like you talk and talk about these things, like I feel like I already feel a difference. Like, you know what I mean? Like I feel like I'm going to the table with a new mindset now. And yeah, no, great stuff, Steven. And just I was looking over our listener questions. And so I just got one more question for you because I think this question you'd be best suited to answer. And it's from at Trading Buddy. Hi, I'm a fairly new trader. I see my best chart setups happening, yet I have a hard time actually executing them at the price entry I set. I end up missing good opportunities or entering them later than I wanted. What can I do to overcome this fear?
Ooh. Okay, so I suppose in a sense I'm going to be a little bit of a chicken here and say that I don't work with new traders generally, because normally the guys I work with have gone past this stage. As I say that they're at base camp and now they want to sort of get higher on the mountain. But I recognize it from my own trading years. When I wasn't seeing it and when I wasn't feeling it, I wasn't necessarily taking those trades. And when I was seeing it and when I was feeling it, like I described a little bit earlier on, I would take them with I could take them with my eyes shut. So he's got to get to that point where he really starts to feel it. Where he's got to trust himself, he's got to trust his process. Like I described the hedge fund guy earlier, he moved from the bank to the hedge fund, and he had too much noise going on his head that was distracting his process. He was worried. Is the hedge fund? Are they going to get rid of me? I'm not doing as well as the other guys. Look at that guy over there. He's killing it. You've got to remove all that distraction, and you've got to start trusting yourself. And you've got to start trusting the process. And I'm guessing at this point, for some reason, he's not trusting the process. And maybe, and without talking to him, there could be other reasons. He might be aiming for perfection. There is no perfection in trading. It's an impossible concept. You can only know in hindsight whether it was the right thing to do or not. So you have to take a view. That is trading. Now, if you're looking at a move and the market hits a level, is it going to break through it? Do you anticipate it because you think it's going to break through it? You have no way of knowing it. Do you wait for it to break through, in which case it could run away? You've got all these things going in your head. You can't possibly know that. But unless you do it, you won't learn it, because that's when you start feeling it. It takes years and years. I think on average it probably takes 4 to 5 years to get comfortable trading. If you're doing it in 6 months, you're still learning. If you're a new guy, you're still learning. But you have to put yourself out there. You have to take the risk. You have to walk on that rope at a higher level, and you have to fall a few times. And you have to know whether you're comfortable. Are you comfortable anticipating? Sometimes anticipating was the greatest thing ever. Sometimes in what seems exactly the same situation, it was the most, it didn't work at all. And you mustn't blame yourself. It's so, to me, when I used to try and trade, chart levels and breaks, to try and get them exactly as you wanted them. You get the false breaks, you get the mini spike,
Yeah.
you can't possibly know. But then you end up having
Definitely.
that thing where you didn't take it and you go, oh, what an idiot. I should have taken it. All the time you did take it when you go, why didn't I just wait another few minutes?
Yeah.
You can't possibly know. So
Exactly.
you have to, and eventually you'll start to feel it, and you'll get better at it. You won't get perfect, but
Exactly.
you'll start to get better at it. You'll start to identify the times where it worked or not. You'll start to feel the flow. You'll start to read the flow and think,
Exactly.
last time it did do this. I'm not going to do it yet. I'm going to hold back. But until you actually feel that kind of in your heart, you're never going to get good at it, and you're always going to be staying where you are.
Mm-hmm. Well, Steve.
That's very true. I can tell that from personal experience. That's so true. And the longer you watch price action, the more comfortable you get with it, and it starts to
That's
speak
it.
to you.
That's it. You've summed it up there. It starts to speak. It does actually. The market talks to you. When I go back to the analogy with the sea. A great sailor knows when the sea's doing. The sea talks to him. There's nothing in the charts that they can read, but they've been there before. They've
Exactly.
seen it. They've done it. They've sensed it. That's what great traders do. And I used to work with some guys, and I was like, how did they do that? I wasn't. I was a market maker
Exactly.
for a while, but I wasn't good at market making. And there were market makers around me who were just brilliant. And I was thinking, how do they do that? How did he know? You know,
Yeah.
it's
Yeah.
it's. I used to work with spot FX traders who had no charts. They didn't trade with a chart. They just trade with numbers in front of them, the numbers on the
Wow.
screen of the price.
Yeah.
And they knew they traded all the levels, but
Yeah.
they didn't know the levels.
Yeah.
Wow. Crazy. Well, Steve, really appreciate your time. Very insightful. And so for the listeners out there that might want to look into you, get in touch with you, tell them where they could do that at.
Yeah, well, I'd suggest emailing. They can email me, Steven.Goldstein at alpharcubed.com. So that's the letter R. Or info@alpharcubed.com will also come through. Or they can contact me via direct message on Twitter. So I'm at AlphaMind101. So there's various routes. So go on my website. There's a contact page, and yeah, and I love this. I love this job. I love this business. I love coaching people, and I love trading. I still do a little bit, but I don't talk about it much. It's more of a hobby um, than a living, and it's everyone has the potential to succeed out there. And you know what, guys, it's great talking to you, and what a great podcast you put together. I've listened to your episodes. The banter between you is brilliant. It makes me laugh, and the one you did, a few weeks ago, and with Steve JJ, that was a really moving podcast. That one, and I guess that's why people tune into this, because you've really started doing something special here.
I really appreciate it, and I really appreciate having you on the show and your insight, because so many people are clamoring for knowledge, and it's nice to shine a light on ourselves
Yeah,
now.
yeah, absolutely.
Yeah, thanks.
And if I'm ever in Vancouver, maybe we'll grab a beer one day.
Well, definitely. I'm
Oh,
actually in
oh,
Saskatchewan
okay.
now,
Sorry, I
but
missed that.
it's not really a tourist destination. Wonderful people, kind of cold. But I definitely do intend to make it to London. I grew up with very sort of British sort of parents. They
All
lived in
right.
London for 10 years. So I grew up on Monty Python and building minis and things like
All
that.
right.
So,
Okay. Brilliant. Brilliant. So you know the lay of the land.
yeah.
Well, look, if either of you are in this
Oh,
side of the
yes.
water, or I'm ever over there, I do get there sometimes, but normally New York rather than the West Coast. But it'd be great to catch a beer one day.
Would be lovely. I really
Okay.
look forward to it.
All right.
All right, thanks, Steve. I appreciate the kind words. Very nice. And then also, listeners, make sure you check out this guy's podcast, Alpha Mind podcast. Correct,
That's
Steve?
right. The Alpha Mind podcast. Yes. Yes.
Yeah, yeah. Check that out. Obviously, we great podcast. Can learn a lot from him. So, Steve, thanks again, man, for your time.
Pleasure. Take care, guys.
All right, Steve.
Thank you so much.
All right, and now we'll wrap up the podcast. We'll just do the listener questions, and we'll be on our way. Okay, so first listener question is from Michelle Frenchie Shizan. Hopefully, I said that right. Sorry, Frenchie, if I didn't. As a new trader, is it best to focus on one trading strategy to learn and know the insides and out before testing other strategy setups? And what is the best go-to setup for a beginner trader to learn? Is it low float penny stocks, mid to large caps, etc.? What do you think, JJ?
Well, I definitely think it's good for a new trader to learn one market to start with. I don't really believe in setups. What I believe in is learning why the market exists, what the agenda of the players in the market are, the structure of the market using something like profile, and the context of what the market is trying to do. Just like Steve said, he knew the market on that big trade of his, something just didn't feel right. So he knew the market wasn't acting the way he thought it would. And those kinds of things, that insight you can only get from focusing on one thing. So I would say definitely learn one market. I'm a huge advocate of the micro, the ES micro, because it's a cost-effective, low barrier way to enter trading. It does not subject you to the risks and the dilution of penny stocks. I mean, you know, uh, being the executioner, I know penny stock trading. You guys, you're fresh meat for me, for guys like me. So, it's just, that is not trading. That is buying somebody else's worthless paper. And hopefully you can get out of it before the price drops. Shorting that stuff is hard too because it's hard to get a borrow. The micro is a nice market. It's liquid. It's regulated. It's based on on real markets, on the S&P 500. There are rules. You can short with one click. You don't have to borrow. There's no PDT rule. And, you don't have some sleazy promoter trying to unload 100 million shares of worthless stock into your buying. So I think that is the best thing to do. And then the best thing the way to see that is, start looking at market profile and start learning the structure of the market and, how basically the market is there. Why are you in it? And what is your purpose in the market? And once you understand those kinds of things, it will help you, um, sort of move forward. But take the time to learn one market well.
Right. Shout out to Frenchie for the question. Thank you for that. And also shout out to at Trading Buddy for the question that we directed at Steven earlier. All right, next question, and this is from at Hollow Possum. What percentage should a day trader shoot for gains and losses on average?
I that's another tough question that I hear people saying, well, you should make $500 a day. Well, guess what? Some days you're not going to. Some days the market's going to be choppy and you're going to do one trade. The more experienced you get, you'll say, you know what, this market's choppy. It's a pickpocket market. I'm going to sit out. Thank you very much. Right? And you won't make any money that day. And you have to be okay with that, right? You have to be able to execute when the opportunity presents itself to you based on your understanding of the market. If you don't understand the market, you should not be executing. So what I think is more important than a percentage of gains and losses, minimal, like really, really minimal. Your risk should be very, very minimal when you're starting out because your trading capital is your gunpowder. It's your bullets. If you were in a firefight and somebody was shooting at you, would you just take your gun and shoot it straight up in the air and waste all your bullets? No. You want to save your bullets for when you need them and when they count. So protect your capital, respect your capital. So your losses should be very, very small. And therefore, also, you should not expect to make $10,000 a day trading or get sucked into the Lamborghini lifestyle videos, right? Trading is about trading well. This whole entire podcast we've been talking about battling yourself. These are all the things that you're not even aware of when you start retail trading, right? You just sit down and, I speak to a lot of retail traders that are brand new. They don't even know why the market exists. They think it's there for them to make money, right? It's like, no, that's not what it is. I mean, that's for us to make money off of you, right? You're the fresh meat, right? And if you don't know that you're the fresh meat, that's even better for us. You're fresher, right? So, like you're just a light, like a small retail, even if you take a $200,000 retail account, which is a good amount of money, that's a nice light snack for a market
Yeah.
maker, right? That's not even lunch, right? So protect your money. Don't try and say I'm going to make 30% on my capital in the first week when you don't know what you're doing. Learn how to trade well. Learn the process. Learn how to be disciplined. Learn how to do the work. And once you start doing these things, you'll be surprised at the results, right? And then you'll also be surprised at when you say, oh, wow, you know what? This market's not for me. There's something weird going on here. I don't understand it. Guess what? I'm putting my hand on my wallet and I'm kind of taking my ball home and for the day, right? I'm taking my ball. I'm leaving. Bye, right? Because guess what? The market's always going to be there the next day, right? Your money may not.
Mm-hmm. All right. Shout out to Hollow Possum for the question. We appreciate it. Um, Next question, and it's from at Miss Social Studies Teacher. And shout out to her. This is actually finally the first listener question that I can answer. And it's directed towards me, Ray. Where do you come up with all the AKAs from in the intro? Um, well, I've just grown up and lived around a lot of characters who, like to use language in a unique way. And I just use inspiration from my daily life. And I can't give away too many of my secrets. So there's, there's that answer. All right. And last question. And this is from Mike Lee. And so follow me on this one, JJ. This one's kind of long. Okay. JJ talked about when a market maker runs out of inventory, they have to go short. They have to go short the stock, and then we'll buy it back at a lower price after the buyers get worn out. For stocks that can go crazy, such as dries, is it possible that market makers will go broke during the crazy run? Was just curious about this after learning about inventory.
Well, what exactly? And when you see a deal like that basically that we call that a briefcase deal or a suitcase deal. And what that means is a company will be listed, but there won't be any stock available to borrow or trade in what we call the float, right? There's something called the Depository Trust Corporation where stock is deposited. And companies like that and manipulations like that will make sure that the stock has been sucked out of the depository trust. So there's no supply. So what happens is a market maker is paid to be at risk, right? Market makers and specialists, their job is to be at risk. They're the buyer of last resort and they're the seller when nobody else is selling. But on companies like that, what they'll do, most of the smaller market makers will start to pull their quotes or kill their quotes off on a stock like that. They'll get burned for $5,000 on a bad trade, and they'll go, "Oh man, this thing is thin. I'm getting out of here," and they'll exit out of the stock because it's not financially feasible for them to be at risk, right? Market makers also have a certain amount of capital, and they have to allocate that capital to stocks where they can make money from being at risk. On a rigged deal like that dries or a suitcase deal or on these short squeezes, yeah, you can really I have had like my clients were like the guys out of John Wick. They've blown up clearing firms on short squeezes, where they'd actually take down a brokerage house or a clearing firm because that clearing firm got too short the stock. They're short the stock at $10. Next thing you know, the stock's at 50 and it's pegged and you can't move it. The whole world is screaming and upside down and people are getting, calls for capital and margin calls and, it's a horrible thing. So market makers, yeah, they will lose money, just because, they see both sides of the trade doesn't mean that they, there's a reason that they make the money they do, and that's because they are paid to be at risk. At a lot of these market making firms in the old days, if you weren't at risk on a stock, they would take that stock away from you and give it to somebody who would be at risk on it. So on these tight deals like, DRYS in the old days, most of these guys, you'll see like the really big market makers, they'll try and make a market in it, but then you'll see the spread. It'll be like $20 bid and $30 offered, right? And that's the market maker trying to protect himself, and protect his capital from the risk that he knows that if he gets taken on that $30 offer, the next seller could be 50, right? And if he's short at 30, you know, he's scrambling to buy it back, and he starts inching that $20 bid up. It's a tough thing. Those deals are designed to take everybody. They'll take the retail money, they'll take the market maker's money. A good stock manipulator, or as what I used to call a smooth criminal, that they can do damage on those deals. When there's no, there's one deal I did where we held a stock at 90 RSI for 3 months. The float was 5 million shares. The short position was 7 million. So we had, the short position was bigger than the float. And go ahead and short it. You will buy all you want at 20. Guess what? You have to buy it back at 50. Thanks for coming out.
Director of Dirty Tricks.
Yes. So definitely market makers are definitely at economic risk. That's what their job is. That's what they get paid to do that.
Yeah, for sure. And shout out to Mike Lee again for the question. Thanks a lot, and thanks to all the listeners once again. JJ, another good podcast. I thought that was very insightful. I mean, and even on just a personal level for myself, and I gathered you felt the same way.
Oh, definitely. I mean, I could have, probably I could have used him 2 years ago when I started out, but then again, I wouldn't have had the experiences that I've had that he spoke to today. So, it's, I guess, everything all in good time. So it was really, really nice having him here. We don't usually get access to people of that level on the institutional side. So I'm
very happy. And you know what, it's funny, and shout out to Steve at Beyond the Trades. I mean, that was the first time I think that episode has actually gotten praise instead of criticism. Remember it's Steve. He complimented you. Steve Goldstein complimented you.
Oh, yes.
On the podcast. I believe it was episode 2, which got a lot of criticism for Steve. I was out in Las Vegas, so Steve had to step in for me as host.
Oh, yeah, I think that was episode 3. That's fine.
No, I'm just saying, that's the first time it got some praise. So, shout out to Steve at Beyond the Trades. Not everyone hated you as host. So.
Oh, take it easy on Steve. He's, it's my brother from Port Jeff.
Yeah, shout out to Steve, man. Oh, but JJ, man, another good one. Thanks for doing it again with me, and see you next time.
It was my pleasure. Have a great evening.
All right, bye.
Okay.